Hello?
I was just saying, tell me when the screen I'm sharing reaches me.
All right, I can see the screen now.
Okay, okay, so we can proceed. Don't have much time. Don't have much time. Okay, what I want to talk about today is something that is simple, and a lot of people they don't teach this stuff. They, they only teach you the
Mm.
teach you the real thing, what is going on. Okay, firstly, I'll talk about four things. The strategy is four simple things. I know basically you know what is market structure. We can talk about it as a video for another day. So today, what I want to do is I want to give you a strategy on V75. Or it works on all delivery. I want you to focus on V75.
I don't know whether it's my network or your network, but sometimes your voice is cutting.
Okay, I was saying, can you hear me right now? Hello? Hello?
Hello?
Yeah, can you hear me right now?
Yes, I can hear you.
Okay. I was saying to you, right? The strategy consists of four parts. So
Mm-hmm.
the first part that I want to talk about is higher time frame market structure. What we call higher time frame market structure.
Mm-hmm.
So what you need to understand about this, it is not different from other strategies. So what you need to do, firstly, you
Mm-hmm.
put your higher time frame, you see what the market structure does at V75. So if you know your higher time frame market
Mm-hmm.
structure, like maybe it's bearish, you write down my market structure, it is bearish. So then the important stuff starts. After you mark your higher time frame market structure, yes, the next thing I want to talk about is sessions. What people don't tell you is that derive, it is like any other market. It has sessions whereby you have an Asian session, a London Open, a New York session, right? So what I want to teach you today is how do you find those sessions and how do you trade during those sessions. I'll show it. I'll show you
Okay.
that I took today on V75 following that this same strategy. So the first session, the first thing you do or you do on your computer, right? You go on trading view
Mm.
for deriv. Don't try to use it on MetaTrader 5 because MetaTrader doesn't allow you to change the time zone. So on deriv, you go to this time zone. You change your time zone to New York. We want to use the New York time zone -5. So if you change your time
Okay.
zone to -5, now you're trading like a person who's sitting in New York. So why do we say New York? What you need to know in trading, everything happens when the New York people are trading. It is not different from derivatives, synthetic indices. The algorithm is designed during the New York session. That's when the algorithm starts to move a lot. So
Mm.
firstly, higher time frame. Secondly, your sessions. You change your session to UTC -5 New York. Then
Okay.
thirdly, the New York deriv algorithm. If you have something to write, you can write, or I will record I'm recording the session, I'll share with you. So the New York session, when we talk about the New York session, you realize your time zone will differ from the time zone we are using. You realize there is a session where the New York closes. at 6 to midnight. By that time, the market is not volatile. What V75 does most of the times, it consolidates. So let's look at this diagram here. So this session from here, okay, this session from here to here, this is the New York close to midnight, right?
Unfortunately, your voice is cutting again.
Okay.
Hello?
Am I now audible? I think it's network. It's network. Am I now audible?
Hello?
Don't worry. When you don't hear me, I will send you the recording so that you can follow.
Cutting.
Cutting.
But anyway, you know what? Just continue even though I'm not hearing. Even though I might not be hearing, since you said you are recording, aren't you? I think it's fine. Just continue.
Okay. Because I'm hearing you quite clearly. So, okay, let me continue. You see this first line, blue line, I've shown you. This first line.
Yes.
This is your
Yes.
6 p.m. New York close on tariff. Then this is 12 midnight New York open. You will find that during this period,
Okay.
your market will consolidate. So what you do, you mark your high, session high, and session low. Usually this session, it will be in the Asian session when we are trading currencies. So what next? What next are we going to do? We are going to wait after 12 midnight. Usually after 12 midnight, when you're trading tariff, when you're in Zimbabwe, it's around 5, 6, 7 in the morning. So you don't have any problem. So around this time, what you are waiting for, you are waiting for market to break the low of the Asian session or the high of the Asian session. Then what you are going to do, it's simple. You are going to buy when the market gets back inside the accumulation zone. So you will target the high. This is the strategy. It is done. We are done. That's how I trade. So let us recap very, very fast because we want to go to the market itself. So firstly, what I'm saying, you wait for this to happen, accumulation, you wait for this manipulation, then you enter when the market is distributing. So it's called the AMD. If you go to ICT, it's called the AMD strategy. The accumulation, manipulation, and distribution strategy. But here we are mixing it with the session zones, like we are trading currencies. So most of the times when we break a low during the open, the New York day open, you'll find there is an order block or something on your left. The market will come and react. You wait until the market gets in back into that accumulation. Then you buy. Put your stop loss below. Then you target the next high. Don't target this high. Target the next high. So this strategy you trade every day. You get 2 or 1 trade per day. Then it is you notice when you get test, it is a high profitable strategy if you follow it correct. So then when it is bearish sometimes, this is a New York, let's say this is your New York close and open. So you have an accumulation in this place, you have a high, you have a low. So when the day starts, you mark your day. This is 00. This is 00. Then this is the 1800 close. When the market closed and when the market opened. So you wait until the market opens. When the market opens, it's either it's seek liquidity like this on your left, or it will break market structure. On that time frame, it breaks the session low. We call it a break of market structure, but it's a break of session low, or you find another low, it will break, then it will react to something on your left, then you wait, because you know when you break market structure, there will be a retracement. This is the retracement. So you wait until the market retraces to something in this area inside your accumulation zone. Here there's an order block somewhere here. Then you said that's how easy it is. This is the easiest strategy and the most profitable strategy when we are trading V75. So don't forget, you need to change your trading view to New York time zone. This is the New York time zone -5 UTC. Then let us let us go to the chart and so what I will do here is, because of time, I won't go to the higher time frame. I will just use this, because this is this is uh, this is a downtrend, right? The market is moving in a downtrend. So let us find our time. I've changed my time to -5. So you take this to move it. You see at the bottom here, there's a timestamp. You need to move it to in 1800. 1800. This is okay. Let's move it. Let's move it. 1800. So the other thing, with this strategy, we use 15 minutes. You only find those times on it in 15 minutes. Don't use it in 1 hour or 4 hours. It doesn't work. Use it in 15 minutes. So you go, this is your 1600, your 1800 here. So at this point, this market closed. So you move your market further, you're back testing to your 0, 0. So let's move it a bit further. A bit further. This is your 0, 0. So this period, this is your Asian session. This will determine the whole day, which the market will do the next day. This doesn't determine anything. This will determine what will happen next day. So what I usually do is I mark this low here. This is the low of that session. You mark this high of the session. This is the high of the session. Right. This is the high of the session. So you can clearly see, right? Are you able to see what I'm talking about?
Yeah. So the first blue line, what time is it there?
This is 1800, 6 p.m.
1800.
Yes. The next line, it is at 12 o'clock, 12 a.m.
Okay.
But it's New York session. It's New York time zone, -5. So if you want to know what time is it in Zimbabwe, you just add 5. You will know this, what time is it. So after that, what do we understand? If you look at it closely, this market, when we opened, we took out this high and this high. Like I showed you, we took out these two highs of this session. Then the market took out the high, it went back in. So I'm selling. I don't think about it. I wait for the candle to close. I sell, put my stop loss at the top. I target the next high. Let's move it forward. You'll see what I'm talking about. What that trade. You're done. Risk to reward of uh, risk to reward of 1:3. Don't be greedy. There's a risk to reward of 1:3. You've got your trade for the day. So the market is still running. You're following, you're just following the market because it's a day, you know? Okay, can you mute your microphones? Because I'm think I'll give you a chance to ask questions later. So as I'm continuing, we said this is your London, this is your New York close for the previous day. This is your New York open for the next day. So it's 1800 to 100 hours. So the trick is you get trades in these specific times. When the market opens, it seeks liquidity, takes out a high or it breaks market structure. Then you realize after the 2 p.m., 2 a.m., sorry, 2 a.m. in the morning in New York, you get a chance to get a trade here. Then you get another chance at 6. If you follow this closely, at around 6 a.m. New York, you get another chance. So there are days where you don't get a trade at 12 a.m., but you get a trade at 6. So you check these specific times, 12 a.m., 6 a.m., and 08:30 in the morning, New York time. You get trades on D75. So we move this 12. Let us move because time we move. The market closes here. The market is closed here. Then we move to the market opens around this time. Right. Opens around this time. So you mark your session high. This is your session high. This is your session low. Then look at what happens. Market breaks. So when the market breaks a low, this is a break of market structure because we said we are bearish. So this is a break of market structure. So when we start to mark our structure right now, you realize you are trading a market structure that is bearish. So what you do is, this is a low, this is a high, this is a low, this is now a high. So your Asian session, we created a high. Then we took out the yesterday's low, which means we broke structure. This is a break of market structure. So what you are expecting, we are expecting the market to retrace during this day. So we're expecting to buy. So you wait for buying opportunities to present itself. The market is moving. It is not giving you anything. You just wait patiently until it gives you something to buy. This is a stop out, right? This is a stop out. This market came here down, came inside, then we are expecting a retracement. So what we are going to do is we are going to buy. We are buying here. Then what you need to expect, because use our FIB to see where our retracement will end. Target our 0. This is the OTE level, 0.618. So we delete our FIB. So that's our target for the day, right? let the market move. We have targeted that. We are done for the day. The next day, what we are doing, because we have now created a what? We have now created a low. So this is a lower low. This is a lower high. This is a lower low. We've come to an OTE level here. We predicted this market will come and the correction will end. So what I'll wait for this market to come inside. I'll wait for this market to come inside this, because I trade what we call turtle soups. This is an ICT concept called turtle soup. It's a stop at. So when I say turtle soup, I mean the market is moving down, it creates a low, it goes back inside, it creates another low, then it goes back inside. So this low and this low creates a turtle soup. So when the market goes back inside, I wait for the market to close inside this area, then I will buy here, put my stop loss underneath. That is what I will do in this area. So let the market move a little bit. The market is inside my zone. So I'm just putting my stop loss at the top of this. I target this low we created. So let the market move. Let the market move. Your TP is hit. So this day you got 2 trades. This day you only got 1. So we haven't lost. We are just waiting. We move the market. We wait for the close. When the market closes, you realize the market closes while you are holding this trade here. This is 1800. Let me move this a little bit. This is 1800, right? So what I want is know where my 12 midnight. This is my 12 midnight. This is my 12 midnight. So look at what happens. 12 midnight. Yes. So this was a session low. This was your session high during this session. But when the day opened, the last hour of this day, we created a stop hand. We came down, came inside. So the next day, the market has showed you that we are buying. So what are we going to do? We are going to wait until this market comes back to this order block here. So wait for the market to come to this order block. Then we buy. Then buy. Then what are we targeting? You will target the high, session high, or you target this opposite order block. But usually I target this session high. So you let the market move. This is a first losing trade. You realize the market went up, went down. Then, according to our market structure, this is a high, this is a lower high, this is a lower low. We failed to make a lower low. So this is no longer a lower low. This is just an impulsive move when you are following correct market structure. So you don't have a trade during this day. You wait for the market to give you a trade. So we are waiting for this market to give us a stop hand. Where did we get the stop hand? We took out this low, then I'm buying. Where do I target? I target this high. 1:3. Then let the market fly. Took me out My stop loss was a little bit nearer, but if you had a much bigger stop loss, you would have gotten this trade. Put my stop loss too close, but we have got this trade. Right? You can see you lost one trade here. This doesn't matter. Yesterday you got 1, 2, 3. Now you've got another trade, 4, which means this strategy is profitable. So let's go to the current price. Let me show you what I did today. What I was looking at today. If you look at V75 today with this downtrend, right? This downtrend. Let us look at what the current price is doing. So with this downtrend, right? When I opened my laptop, I looked for, because it was early in the morning, this where's the session end? Session is here. This was yesterday's end of New York. Then this is 12 midnight. Then get this. So then get this session low. So when this day opened, this huge candle, look at it correctly, this huge candle here. Let me remove this. You can see there's a wick here. The market came, took out this session high. So what I did when I saw this, I just waited for this to come back into my, I went to the smaller time frames. I got this trade around here. Then what I did, I targeted this trend line because it was only a trend line. So I targeted this trend line. Then the other trade during this day, if you notice, we took out this session low, we took out this session high, we took out this session low. Market came, it reacted on this on this trend line. But if you look at this other side of the trend line, let's move this. Yes. Look at this other side of the trend line. We have this breakup block, this area, this breakup block in this area. So what did the market do? When the market opened in the morning, it took liquidity to the top, took liquidity here at the top, it came down to this order block, okay, to this order block. Then what I was waiting for this market to react with this. So if you notice, because we don't have much time, we had a stop hunt here. So I waited until this market closed inside this stop hunt, then put my stop loss, then I targeted the next trend line. If you want, I can show you my results of this trade I took today on V75. So what I'm looking at next on V75, because I've noticed it is on this order block here. So what I want to see is, I will follow this. It is already 10 a.m. In New York. So the market is closed around, it's 10 a.m. The market isn't closed. So I'll wait for 12 noon. For 12 noon, I will know this market will react to something like this, I need to move down. So I will sell this place around 12 noon New York time. So this is the strategy, guys. It's a very simple strategy. If you follow it closely, you can make a lot of money and make a lot of money. So I'll open for questions because we are only left with a few minutes. Those who want to ask me questions about this, you can ask. Then I'll try to clarify.
You said the 3 times that you are supposed to target are what?
Okay. Let me show you those times because you think, okay, you see this is 12, right? If you move candle by candle, this is 2. If you notice, around 12, there's 12, there's 12 here. Then at around 2 here, you get another. And then at around 6 in the morning, look at this. This is 6. This is 6. What happened around 6? The market had a stop and it came back, it retraced. So at around 6, we would have bought here because 6 is here. Around 6 a.m. in the morning, there's another entry. So it's 12. One entry, you find it at 12. The other, you find it at 2 a.m. The other one at 8. It's at 6 a.m. Then the other entry, it is at half 8. If you look at this at half 8, here, we have this breaker block here. Then half 8, with the bought again here, put your stop loss here. So this, you add one position, then you add a position at 2 a.m. Then at 6, you get an entry at 6 a.m. You get an entry at 8:30 a.m. Then you are done for the day. We can go back. Let us look at let's look at the previous day. Let's look at the previous day. Confirm. Okay. This is 12 a.m. right? Then get this is 6. This is 6. This is 6. Where is 6? 6 p.m. here. So what do you have? It's a low of what? Of the session. Then which was the high of that session? This was the high of this session. So what did the market do? We took out the low of the session. We had a stop and the market got back inside. Would have bought here, put your stop loss beneath fuck it. Okay. Then you target this opposing order block here. They've got a nice trade. Then let's look at the times. What time is it? Okay. Looking at this trade, this is a 12, right? A 12. If you are following market structure with the break of market structure, this is at around 2 a.m. We have got this trade around 2 a.m. Here, around 2 a.m. We have got sold here around 2 a.m. Why do I have keep on messing this? Okay, we have got this. This is around 2 a.m. So everything, it happens in time. Whether they are trading indices, forex, it happens in time, derivatives time. So if you look at it closely, we move. This is is around 8. You see here, it's around 8 here, around 8. It's around 8 with this order block here. So you would have again sold it around this time. Where is 8? 8 it is here. So you would have 8:30. You would have sold again at around 8:30, adding positions, targeting the same target here. Then you're done. So it's 12. This time at 12, what happens at 12 is this order block here. So the market came back to this order block. One trade, you've got one entry here at 12, at 2, at half 8. This time at around 6, we didn't have a trade. 5, 6. We didn't have a trade. So we got a trade at 12, at 2, and at half 8. So those times, you look for entries around those times. That's where I look for entries. I'm not worried about any other times or 3 o'clock in the afternoon. I look for entries at around 12 a.m. New York time, around 6 a.m. New York time, and around half 8 New York time. You always get trades around those times. But what you need to understand about this strategy, you will not get a trade, let's say from this point all the way to this point. No, using this strategy, you only get a trade from here to maybe here. It's enough. If you know how to trade, because you are getting these trades every day. If you backtest this maybe from last year, you will find you get a trade every single day. You get a 1:3 trade every single day. So what you need to understand is you need to stick to the rules of this strategy. You are guaranteed success, but you won't get 1,000 points per day. You only get maybe 100 points. But if you know how to risk manage and use good lot sizes, you will make a lot of money. You will be rich. So thanks guys for this session. If you need another session, look at the market structure, you can always DM me, send me a message on certain topics, or should I repeat this strategy? You need to talk to me. So thank you so much. Thank you so much, guys.